Konnichiwa, Zamurai Engineer desu. In this video, let us discuss Chapter 9, which talks about fixed assets. So let us take a look. Previously, this is called fixed asset, but recent years, it is now called plant assets, natural resources, and intangible assets. Actually, plant assets and natural resources. Another type of asset is intangible assets. So, previously there are three main subtitle in assets. That is current assets, fixed assets, and intangible assets. So, nowadays, instead of calling it fixed asset, it is called plant assets and natural resources. Okay, so let us discuss all the principle and concept behind using the authors Weigand, Kemmel, and Queso. We have the following lessons prepared for this chapter. Number 1, accounting for plant asset expenditures. Number 2, apply depreciation method to plant assets. Number 3, explain how to account for the disposal of plant assets. And number 4, describe how to account for natural resources and intangible assets. And number 5, plant assets, natural resources, and tangible assets are reported and analyzed. So let's go directly to lesson 1, accounting for plant assets is expenditures. Plant assets are resources that have the following. 1, physical substance, meaning dimension, definite size and shape, weight. Okay? Those are physical attributes. Okay? 2, used in operation of a business. Okay? That plant asset have to be used in the operation of the business. If not, that is not a plant asset. Okay? They are intended and they are not intended for sale to customers. That's the difference of being it a plant asset. They are not being used as operation. Maybe they are intended for selling, sale, reselling, resale, okay, and for other purposes, but not for operation. Then that is not plant asset. They are expected to be used for a company for a definite number of years. The number of years depends on company and based actually on scientific provided data. For example, why did you say that? Why did you say that this light bulb could be used for 2 years without replacement? Because there is a scientific data information associated with that. The manufacturer of that bulb already tested that for that period of time. That's why you are basing that on the testing of the manufacturer, and you use their recommendation. Okay, so but although you are using the recommendation, you have uh, the flexibility to use otherwise. For example, you just use 80% of that recommendation. It depends on the company. Okay. Although when we say it depends on the company, there must be some justification, not just by looking at the sun, just looking at the moon. You suddenly have an idea that it could be used for 2 years. So that is not the case. So anyway, we have uh, to refer to these things as property, okay? Plant and equipment, and fixed assets. These are the alternative title of this account. let's go further. Plant assets are critical to company success. You'll notice there are several examples of known popular companies here. Microsoft, 3% asset. 3% plant asset. Okay? As a percentage from the total assets. Okay? So, probably Microsoft has more cash assets, cash rather than uh, plant asset. So, it depends actually on the operation of the company. Why do you need Microsoft to have uh, more plant assets when their operation are more on software and what application, software, internet application, so like that, no? Computer applications, software. So they may not need so much of the plant assets. Okay? For example, Caterpillar, you will see they need some plant assets for their operation because they are dealing with what? Caterpillar is a company uh, producing tools and gadgets, accessories, devices, equipments for construction and industrial use equipments. No? So, Walmart, for example, is a shopping mall. Okay, Walmart store, shopping malls. Okay, they need what? Plant assets, 53%. Maybe the space, the place, even the parking lot, they are using that for their operation. More plant assets there. Okay, Wendy's, they need 73%. Okay, so it depends upon the operation, the type of operation of the company. When this operation is different from all operation, there are some similarities, but they are different. Even uh, the same category of operation, for example, there are several types of malls. They have different operational characteristics. So it depends on the situation. Okay, so determining the cost of plant assets by historical cost principle. There are two types: historical cost principle, and the other is fair market value. Okay, fair fair value. Okay, historical cost principle requires that companies record plant assets at cost, meaning spend, how much you spent on acquiring that asset. Okay, cost consists of all expenditures necessary to acquire an asset and make it ready for its intended. That's not only on, for example, your plant asset is heavy equipment, and the cost of heavy equipment is 2.5 million. Not only that, how did you acquire that heavy equipment? All the, for example, the transportation expense, freight cost, okay, not including the not including the maintenance cost. Okay, not including the maintenance cost, not including the fuel cost, but all the other costs to acquire that asset from other company or individuals or entities control to your control, your company's control. How much cost did you spend? For example, the fuel is not included, but the fuel used to transfer that ownership from their storage site to your parking area is the cost of plant asset. Is that included? Because that fuel amount is necessary to acquire that asset. Okay? For example, how many people needs to be there to process the actual transfer from one area to another? For example, 5 person 2 drivers that will alternate, and 3 helpers, for example, 5 are needed, for example, because of the far destination. Okay? What will happen? The expenses of those 5 from starting point to your yards is included in this cost. Okay? So, okay, let us determine the cost of plant assets. For example, land. All necessary costs incurred in making the land ready for its intended use increase the land count. So, it will the land will have a land account in our accounting record. So, land account, we have debit and credit also, but since it is land, it is usually the debit side, okay? Because it increases. Very special occasion, only very special occasion that land value will decrease. Okay? For example, when suddenly, due to global warming, the area wherein the land is located suddenly become flooded, and flooded for so long. For example, 5 years, still flooded. So that is the situation wherein land could diminish. So it is not impossible that land will diminish its value. Okay? But you are not looking for that. You are looking for the cost, historical cost, meaning what is the value you paid for in order to acquire that land. We are not talking of fair value today. We are talking of the value at the time you acquire that. Okay? And making that land ready for its intended use. What is the intended use of that land? Parking? What's the intended use of that land? Factory? What's the intended use of that land? Warehouse? So, ready that land to be a warehouse. So, it will include what? Bulldozing the surface, bulldozing the soil, and flattening it out. Okay? So, those things are the value, the cost of making the land ready for use. Okay? Okay. Cost typically include cash purchase price. Okay? Then closing costs such as title and attorney's fees are included because you need this legal fees and titling, meaning transferring the uh, title in the company's favor. Okay? 3, real estate broker's commission. This includes the real estate commission. Accrued property taxes and other liens on the land assumed by the purchasers. Okay, so if the land has been mortgaged by the previous owner, and maybe the new owner will agree to cover the mortgage fee. Okay, so those are the things that are necessary to calculate the cost of plant asset. Okay. Determining the cost of land. Example, Hayes Company acquires real estate at a cash cost of $100,000. The property contains an old warehouse that is raised at a net cost of $6,000. $7,500 in cost less $1,500 proceeds from salvage material. Okay? Okay? Old warehouse. Additional expenditures are the attorney's fee, $1,000, and the real estate broker's commission, $8,000. Required. Find the amount to be reported as the cost of the land. What is the cost of the land? So you have to what? To record it this way. Land, 100,000 cash. Net removal cost of warehouse, Okay, 6,000. Because there is a warehouse previously from the old owner. Then you have to spend 6,000 for removal of that warehouse. And that old warehouse, you can sell for 1,500. And the cost of removing is 7,500. So you have to subtract. So the balance is 6,000. Okay? Attorney's fee, 1,000. Commission, 8,000. So total of this is going to be 115,000. Okay? So cost of land. This is the cost of land because now the land is prepared and to the title of the Hayes Company. So the Hayes Company makes the following journal entry. Land, 115,000 cash. So although this is going to be their journal entry, there are several documents, source documents that need to be attached to this as an evidence. What is your evidence? Cash price of the property, the receipt from your $100,000. Then your cost in removing the warehouse. Okay? 7,500 minus your whatever the cost of selling it. Okay? So total of 6,000. And attorney's fee, you can ask for receipt as attorney's professional fee, 1,000. Then real estate broker's commission, also you can ask for acknowledgement receipt from the real estate broker. They also have receipt there, 8,000. So a total of 115, not only the price of the land itself. Okay, total of this. Okay, determining the cost of land asset for land improvements. So this is now different thing. That is now with land improvements, structural addition with to land, meaning building or structure. What are the other structure? Bridge, floors or parking, so fence. Those are structure that could be added to this land. You need fence because there are other elements unauthorized to get inside the area and they are doing damage to the area. So you need fencing around the property. So structural. Okay. Example, driveways, way road, so inside that area. Parking lots, fences, landscaping, underground, sprinklers, limited useful lives. Okay. Expense the cost of land improvements over their useful lives. So for buildings, what do we have here? Include all costs related directly to purchase or construction. Purchase cost, purchase price, closing cost. What are those? Again, towing space, title insurance, and others. And real estate broker's commission. Remodeling, replacing, repairing of roof, floors, electrical wiring, and plumbing. Those are the cost of the building, construction cost. Contract price plus payment for architect fees, engineer fees, permits, excavation costs, and the like. So, excavation is included in building, not in the land. But you are actually excavating the land, not the building. But the building is uh, what requiring the placing of footings and foundation. Where do you put the foundation footing? You have to excavate the land. Okay? Determining the cost of equipment. Include all costs incurred in acquiring the equipment, preparing it for use. Costs typically include cash purchase price, sales taxes, freight charges. That's what I'm explaining about several slides ago. Freight charges. Insurance during transit. During transit, for risk-free transaction, you need insurance. You don't know what will happen along the way. So that expense is again have to be included as the cost of the equipment. Expenditures required in assembling, installing, testing the unit including the uh, professional fee of the skilled workers or the experts. Okay. So example, Leonard Company purchases a delivery truck at a price of 20,000. Related expenditures as sales taxes 1,320, painting and lettering 500, motor vehicle license 80, in a 3-year accident insurance policy 1,600. Compute the cost of delivery truck. The delivery truck 22,000, 1,320, 500. Okay, so cost of delivery truck 23,800. 20. Okay, that is the cost of truck 23,820. But if you can recall, we have what 1,600 insurance and what motor vehicle license, the plate, no? Okay, so you have to do this way. So 880 pesos license expense and prepaid insurance 1,600 because license expense is an account of the company. Also, prepaid insurance is an account of the company. So you have to segregate its value, the value of the truck to this license expense and prepaid insurance expense. Okay, so expenditures during useful life, ordinary repairs are expenditures to maintain the operating efficiency and productive life of the unit. Debit to maintenance and repairs expense. So another account name, maintenance and repairs. So just like what I explained a while ago, maintenance and repairs are not included in the uh, plant equipment or the like because maintenance have a separate account name. Repairs is included in maintenance account name. Can be what referred to as revenue expenditures. Revenue expenditures. Okay. Additional improvements are costs incurred to increase the operating efficiency. Increase the operating efficiency. Ordinary repairs is just to maintain, but to improve is better than to maintain. No, productive capacity or useful life of the plant asset. So debit the plant asset affected and referred to as capital expenditure. So there are two types of expense here: capital expense and revenue expense. Okay, for ordinary we have revenue. It just maintained. But for capital expenditure, we added something. Okay? So, anatomy of fraud. Bernie Evers was the founder of and CEO of phone company WorldCom. The company engaged in a series of increasingly large debt finance acquisition of other companies. This acquisition made the company grow quickly, which made the stock price increase dramatically. However, because the acquired companies all had different accounting systems, WorldCom financial records were a mess. This is one of the complexities of recording and accounting. Okay. When WorldCom's performance started to flatten out, Bernie coerced WorldCom's accountants to engage in a number of fraudulent activities. Okay, Bernie is the CEO and founder of this company. To make net income look better than it really was and thus prop up the stock price. One of these frauds involved treating $7 billion of line costs as capital expenditure. Cost is expense. No? But there are two types of expense. There are what? Two types of expense. One is ordinary and the other is improvement. So capital expense and is the improvement and revenue expense for what? Ordinary. Okay. The line costs, which were rental fees paid to the other phone companies to use their phone lines, had always been properly expensed in previous years. Capitalization delayed expense recognition to future periods and thus boosted current period profits. So, okay, because that is capital expenditure, okay, it could be delayed in recognizing it. Okay. How about revenue expenditure? They have to be recognized on that period of accounting, on that accounting period. Okay. So what happened? 7 billion. The missing control documentation procedure. The company's accounting system was a disorganized collection of non-integrated systems, which resulted from a series of corporate acquisitions. Top management took advantage of this disorganization to conceal its fraudulent activities. Okay, independent internal verification. A fraud of this size should have been detected by a routine comparison of the actual physical assets with the list of physical assets shown in the accounting records. So, because there is mess in documentation. Okay, so Bernie was able to talk to accountants. So, accountants are the main person to talk about when you want to do fraud. Now, we know what they are thinking. As an industrial engineer, we know what they are planning. Okay? So, without this information, previously, we don't have any clue on what they are doing. But now, because we are learning about financial accounting, we are aware of the possibilities, right? Good or bad. Okay. So another one, many US firms use lease. Leasing is a big business for US companies. For example, business investment in equipment in a recent year totaled 800 billion. That much. Leasing accounted for about 33% of all business investment, about 264 billion. Who does the most leasing? Interestingly, major banks such as Continental Bank, JP Morgan Leasing, and US Bancorp Equipment Finance are the major lessors. Also, many companies have established separate leasing companies, such as Boeing Capital Corporation, Dell Financial Services, and John Deere Capital Corporation. And as an excellent example of the magnitude of leasing, leased planes account for nearly 40% of the US fleet of commercial airlines. 40% are just leased from other companies, but they are using their planes. Right? So, Lease Finance Corporation in Los Angeles owns more planes than any airline in the world. Leasing is also becoming increasingly common in the hotel industry. Marriott, Hilton, and Intercontinental are increasingly choosing to lease hotels that are owned by someone else. Previously, they are owning the hotel. Okay? Now they are just leasing. They are the biggest names in hotel business. Marriott, Hilton, Intercontinental. They are the highest number of stars. Okay? suite, luxury hotel. They are luxurious there. Okay? One might, why might airline manager choose to lease rather than purchase the planes? Please have your opinion on this, and your opinion is put in the comment section below. Okay? Again, this is Dr. Rippy, Samurai Engineer, saying engineering is for nation building.